All right, good evening, everyone. This is the lesson slash in-depth mark review slash trade review for the trade I had taken on Wednesday, August 6th, 2025. I'm labeling this as QT signature on Power 3 and market maker models, essentially breaking down how QT plays a role in the development of our Power 3 and market maker models that we were trading last week. So a few concepts you want to understand before moving forward, first of which is time frame alignment, the foundations of Power 3 market maker models, the introductions that Day has given us on YouTube, and then of course the what videos that all come before this lesson that you're watching now. On top of that, that is it. So when it comes to understanding the framework for how Power 3s and market maker models interlink, well, we've been covering this throughout all the previous videos on this exact same topic, but specifically the framework in which we had delivered last week from Tuesday, August 5th and August 6th, 2025, Wednesday. This is what it looked like. So this candle, this down close candle, was Tuesday, representing the sell side of the curve of this market maker buy model. This candle, this up close candle, is Wednesday, which delivered the buy side of the curve. So this is the overall framework in which price had delivered from on those 2 days. And that ultimately leads us to where we first want to go over. Actually, before anything else, I forgot to even show you guys what the trade was. So obviously, if you're watching this video, you, as of the date that I'm releasing this, you know what trade I'm referencing, but it was specifically this long position, as we can see right here, catching just over 140 points. This was a position. My TP was a pre-say high. Ultimately, we just want to break down how we got to this point in the first place. And the first thing that we're going to break down, everything that I list here, ultimately stems from this. It stems from understanding the development of our yearly Power 3. Now, when it comes to indexes specifically, we really don't study anything above the yearly Power 3, just as anything above that, it's practically bullish the entire time. Really, the yearly Power 3 is the highest Power 3 we really look at, and from there we break it down onto lower time frame Power 3s, quarterly, monthly, weekly, and so on. But when it comes to the development of our yearly Power 3 here, we first want to study what we had seen at the beginning of the year. Yearly Power 3 opens, we get our classic accumulation, manipulation, and specifically right there, accumulation, manipulation, forming our smart money reversal into our distribution, specifically forming within discount of this range that we've been building over the last few years. And obviously you can't see this on this chart, but you look back at this date on April 7th, 2025, go look for intermarket sequential SMT, specifically monthly cycle intermarket sequential SMT on your currencies, and you'll identify that. You'll identify what sequential SMT was formed on our reversal, literally the exact same day. Monthly cycle intermarket sequential SMT. Go look for it. Anyways, from there we can see accumulation, manipulation, distribution. We are currently within the distribution phase of our yearly Power 3. What does that mean? Well, it's not just any sort of distribution. We have to consider a few things. First thing to consider is how far we manipulated to. 6,000 points. That is not a small amount. That is a very large amount even for yearly Power 3. For example, let's reference last year's yearly Power 3. The only manipulation we got was 600 points. Yet price still ended up delivering about 5,000 points higher. So price is going to manipulate down 6,000 points. How far do you think we're going to distribute? The larger manipulation, the larger the distribution. Now, due to that, we can see that price has been trending this entire run higher. Trending higher, each retracement reacting off of a higher time frame PD array, no actual seeking of a rebalance. And why is that? That is simply because in a bullish trending market, what price does is go from higher time frame PD array to lower time frame crack and correlation. Now, fear, why in the first place would we not need to rebalance? Isn't this range unbalanced below us? No, because what is rebalancing? Well, the only reason rebalancing needs to happen is when price is unbalanced. And what makes price balanced or not? Well, unbalanced is when we either lack sell side delivery or buy side delivery. And tell me, what do you think this entire move lower was? Sell side delivery, because we're trending lower. And what is this entire move higher? Buy side delivery. So we have a balanced range here. This entire run lower is already balanced out because we have already seen both sides of delivery. And something I referenced in the YouTube video was the fact that we in fact rebalanced this range. The only range that needed rebalancing was the point from where we had started the sell side of the curve and from where we traded above it. So we started the sell side, delivered into the buy side, trade above it, and then we return to it. This is all that needs to be rebalanced. And what do we specifically want to study right here? But what we want to specifically study right here is what actually caused the reversal. So obviously in the higher time frame, we were rebalancing, but when we zoom in and look very closely in terms of quarterly theory, there's a few things. The first thing that stands out is the fact that YM is delivering from a monthly BISI, while NQ and ES both fail to trade into that, already giving us a monthly SMTF. Additionally, there was also a weekly SMTF. Now with YM running out this monthly BISI or tapping into this monthly BISI, that was also running out the previous month low, while also NQ ES both failed to, giving us quarterly cycle sequential SMT. On top of that, to add even more probability, look at this monthly candle. It's a down close candle on YM. It's a down close candle on NQ. It's a down close candle on ES. And we soup it on YM. We don't soup it on NQ and ES. That is a monthly PRC swing divergence while tapping into a monthly and weekly SMTF while having quarterly cycle sequential SMT. That is everything we need for continuation higher. That is it. On additional confluence for in terms of what NQ and ES actually did, well, we can see NQ soups the quarterly cycle and DFR low. Same thing on ES. So we still raid some sort of sell side on NQ and ES, and more specifically, we still raid some sort of significant sell side on NQ and ES. That is why validation higher at this point was in fact valid. And specifically when this screenshot was taken on the monthly time frame, NQ was only, I think, around, like, it was within this candle right here. Look at that. Look at us now. We have been expanding higher off that, proving that this stuff works. So what did our market maker buy model look like? Well, this market maker buy model, again, was these two candles. These two candles are right here. This down close candle and this up close candle. That's our market maker buy model, represented within power threes, within daily power threes. Now, why in the first place are we looking for longs here? Well, when we study our triad, we come from here. This immediately points us to be bullish. And what did I list back here? Well, if higher time frame there to this point is bullish, what does that mean for every single lower time frame? Going into every single month, every single week, every single day, we are looking for classic open low high close development. Technically speaking, not every single day, but every single week we're looking for classic open low high close development. And with last week, the week before the trade I had taken, giving us our manipulation, again, thinking about this in the sense of studying our weekly power 3, what did our previous weekly power 3 do? Aggressively manipulate down 1,000 points, tapping into everything that we just shown here. So logically speaking, where do we have to manipulate to going into the next weekly power 3? Nowhere. We don't have to manipulate anywhere because the previous week already did our manipulation. We already ran out all of our sell side targets that we need to manipulate to. So at this point, all we're looking for is longs for continuation higher. And going into the day, Wednesday, that I had taken that trade, what supported it? So let's quickly go back to the Wednesday open, Tuesday 6 p.m. What do we see at Tuesday 6 p.m.? So there's actually going to be a few things we mark out here. First of which is the fact that after our initial Sunday, Monday expansion, we can see the price returns into discount of the current weekly range, joining it out from the current weekly low to the current weekly high, return it to discount. What does price do within discount of the range? Zoom in very closely here. More, we can see right here, YM fails to run out again the pre-stay low, which is this red box right here, during this new quarter, which is right here at 1800. we fail to run it out on YM. We do so on NQ, we do so on ES, giving us weekly cycle sequential SMT within discount of the range. Now, something else I forgot to mention was the importance of our true week open here. So with our true week open here, in the sense of AMD, true week open, we had our accumulation, manipulation down, manipulating down into discount of the range, what validated continuation higher. Weekly cycle sequential SMT. Now, at the same time we formed weekly cycle sequential, that was also forming daily cycle sequential. As we can see right here during Q1, the new daily open for a daily cycle, we failed to run out the Q4 low, this blue box right here on YM. So we then formed two-stage sequential SMT within discount of the range. Then to confirm those SMTs, we then formed a 1 hour PSP right here at the 6 p.m. open. So immediately we can already validate continuation higher. But obviously we are not trading overnight. We're going to wait for New York Open. From there, going into New York Open, what do we see? Oops, going a little bit further than I wanted. It's been a little bit slow, in fact. Hold on. All right. So going into New York Open, what do we see? So obviously we're looking for higher prices, but quickly let's now reference our weekly market maker model, or our 1 hour market maker model. So that first daily power 3 on Tuesday, that put in the sell side of the curve, what do we see? Well, true week open immediately manipulates down. We had accumulation, manipulation right after our true week opens into discount of the range, weekly cycle, daily cycle, sequential SMT, and of course we're bullish based off all the confluences we see here. Then seeing all this stuff combined together, that then supports longs. So now in the sense of a market maker model, what do we see? Well, daily power 3 opens, also our true week opens, accumulation, manipulation down. So this is our original consolidation. Reason being, well, it's the start of two different significant openings. Technically the same significant openings, but two different meanings. So one, a daily power 3, and two, the true week open. Accumulation, manipulation down, without seeing any aggressive manipulation above price. And that points for setting up a market maker buy model. Original consolidation, first stage reaccumulation, weekly cycle and daily cycle, and from there Asian session expands higher, London session opens. From there, manipulating down into discount of the Asian session range, which was our current daily range. Well, it manipulates into discount. Within discount, that is also giving us our first stage redistribution. So specifically looking at when that happens, our redistribution happens, or I guess we should say finished, at 6 a.m. From there, we started trending higher. So what does that mean directly going into New York Open? Well, directly going into New York Open, we are looking for expansion higher almost immediately. But obviously, since our sequential SMT, more or less the higher time frame sequential SMT, happens at our daily low, we can't really reference that directly going into the morning because, that happened a significant time ago. We still need to, in reference to my model, we still need to see some sort of lower time frame sequential SMT. And we get that. We can see right here that NQ during Q3 feels around the Q2 low, specifically 90-minute cycles. So we form 90-minute sequential SMT. As you can see, ES runs it out, YM runs it out, NQ fails to, below the true day open, giving us the 90-minute sequential SMT going into 9:30. Now, fear, you took the trade around 10:40-ish. Why didn't you take anything going into New York Open? The reason I didn't take anything going into New York Open is because of this. So quickly, I'm going to mark out the initial high day, which was our daily cycle Q2 high. So I didn't take longs due to this. So if we've just formed 90-minute sequential SMT, we obviously want to see a 5-minute swing divergence to validate a 1-minute CISD. But 9:30 opens, and we obviously failed to form a 5-minute swing divergence. And while doing so, we also run out our immediate drawn liquidity going into the morning. Now, obviously, we're expecting the original consolidation high, but the fact that we just ran out the daily cycle Q2 high, formed daily cycle sequential SMT, that is not ideal whatsoever for longs. Now, we can see that obviously, sure, we come back down, we form a 5-minute swing divergence. Let me turn off this indicator really quick. We form a 5-minute swing divergence, we get a 1-minute CISD. Honestly, that is honestly a pretty decent setup. Now, on top of having On top of having a 5-minute swing divergence, we also had a 1-minute swing divergence. So technically speaking here, I'll be completely honest, in review, now I'm noticing this 15-second CISD could have been a pretty solid entry. If I'm just being completely honest, I'm seeing this now. This could have been, honestly, a pretty decent first trade. Wherever the CISD happens at. Right there, stop loss at the low. Potentially even put it at the previous 9-minute low, just to really protect it. That's only a 30 point stop loss. Not that bad, honestly. That could have been a pretty decent first trade. I didn't see that. What I saw was 9:30 opens up. We immediately run out our immediate draw liquidity from daily cycle sequential. Not ideal. But we did form a pretty decent setup after that. Price runs out the high, you more than likely move stop break even, and then you more than likely got break even there. So realistically speaking, that trade would have been a break even trade regardless. But now, what can we look at this in the sense of a power 3? Well, if 9:30 pretty much didn't really give us anything, obviously that 15-second CISD could have been entry, but you got screwed there after having massive manipulation. So quickly before my entry, let's just study why we had to manipulate back down here. Well, in the sense of power 3, what do we see at 10 a.m.? 10 a.m. opens and immediately expands. Immediately expands higher. That's not optimal whatsoever for an entry. On the 5-minute time frame, we do see that price does form a 5-minute SMTF. Fear, do we enter a 5-minute SMTFs alone? No. Whenever it comes to a 5-minute crack calculation, we always wait for it to be tested, and then we wait for a 1-minute CISD. So price trades into that 1-minute SMTF or that 5-minute SMTF. However, we never got a 1-minute CISD. So we wouldn't have taken anything off of that. But the whole reason we needed to manipulate lower was due to the fact that 10 a.m. had no manipulation beneath the opening price. So in the sense of our daily power 3 opens, expands. We already had our daily manipulation as we had weekly cycle and daily cycle attached to low day. We already rebounced the range below us, performed 9 sequentials in the leading up to New York Open. So our daily power 3 is already bullish. Our weekly power 3 is already trending higher. Going into our 10 a.m. 4 power 3, we want to see continuation high. The only issue is we don't have any manipulation beneath the opening price. So we want to get that. We got that. Price manipulates beneath the 10 a.m. opening. From there, we form a 5-minute swing divergence. And completely honest, this could have been another decent 1-minute entry. We had a 5-minute swing divergence and a 1-minute CISD. Now, technically speaking, on NQ, our CISD is up here, but I do argue a lot that if we have a 5-minute swing divergence, such as what we have here, aka a lower low on the other assets, we can technically count that as our 1-minute CISD. Nonetheless, it's not what I had that off of. In the sense of market maker models, what do we know? Well, what we know is that we focus on the right time frame alignment. Now, technically here, 1 hour PDRA, as we saw low day, reacted off a 1 hour BISI in discount, while additionally forming 9-minute sequential. So technically speaking here, what you could have done was just wait for 5-minute structure to be clean. Now, obviously, there's 2 opportunities for longs, both of which were honestly pretty decent. 5-minute swing divergence, 5-minute swing divergence, and then just a lower time frame CISD. I did not draw that. I entered off clean 5-minute structure. 5-minute CISD. All right, we saw 5-minute displacement, 5-minute CISD right here. 5-minute BISI forms. And now the 5-minute BISI itself is not significant at all. What does turn significant is this. So as we can see right here, 10:45 forms a PRC, as this is a down close candle on NQ, a up close on ES and on YM. While doing so, the 5-minute BISI gets significant because only NQ trades into it. So that then forms a 5-minute SMTF while also forming a 5-minute PRC swing divergence. Those combined together while also seeing clean 5-minute structure then validates me to drop down to a 1-minute time frame. In terms of 1-minute cracks and collations, there was nothing, so we could not validate dropping down to a 15-second, but all I did there was enter off of the 1-minute CISD, stop loss at the low, and TP at the previous day high, and I just let it run after that. As we can see right here, and I'd only moved my stop loss break even after we started accumulating, and I, obviously traded significantly above my entry. Now, Fear, why did you not trim at all? Which may be a question that some of you guys may have. Why did I not trim at all? Well, what do I teach in the PD rays do not matter as much as you think what video? Well, in the sense of that video, if higher time frame market structure is incredibly bullish, and we have everything checked off here, we're trading within the buy side of the curve, the market maker buy model, we're distributing higher. Why should we react off of a bearish PD ray? Why should we? The only way we're going to anticipate a bearish PD ray to hold is if higher time frame market structure is bearish. It's not bearish here. It is not bearish here. So we are looking for new highs to be made. We're looking for bearish sequential SMT, bearish PD rays to be invalidated. Due to that, the only drawn liquidity we could have would be a time-based high, such as the previous day high, which was the only time-based high we had at the time of my entry. So that is why there was no trim, no partial, none of that. All I did was trim my stop loss break even after seeing a rather significant amount of profit and just manage my risk properly. And that is exactly what I have listed right here. Now, this is my entry, these are my executions, and that is exactly it. 1 MSCI is the entry, stop loss at the low, TB at the previous day high. That's all there is to it. Now, what is the biggest thing that you should take away from this video, this lesson? Well, when price is in a clear distribution stage, what we're not going to do is fade it, whether that is the distribution for our yearly Power 3, as we already discussed, going every single month, every single week. We're not looking for shorts. Stop looking for shorts. I saw a lot of people on social media think that shorts are going to play out. I saw quite a few mentors post talking about how price is going to come all the way down here, and that's not calling out anyone, but it's just not being able to read price, or more or less understand price. A lot of people are talking about how seeing this massive displacement right here means we're going to come down and rebalance this range. This range does not need to be rebalanced for the reasons we already listed earlier. This gap does not need to be filled. This range is already rebalanced, or I guess already balanced out. And then seeing all those confluences, as we showed on the daily time frame back here, that's your confirmation for continuation higher. There is no reason to see price to rebalance. So stop trying to fade the distribution stage of whatever Power 3 you're in, because if you cannot, you're going to get stopped, you're going to lose a lot of money, and you're going to blow your accounts. So stop trying to do it. And that doesn't just apply to the yearly Power 3, it applies to every single Power 3. If we are bullish within our weekly Power 3, stop trying to short it. Stop trying to make bearish outlooks. If we're bullish on a day, to summarize everything, seeing bearish confluences does not mean you should short when everything points belongs. The only reason you can validate shorts in a bullish market is when a lower time frame narrative points bearish. And why would we point bearish? The only reason we point bearish is only if there's no bullish confluences. So only if there's no bullish sequential SMT intraday, or if there's a super unbalanced range below us. Even then, it's more ideal to just wait for the range to be rebalanced and then look for continuation higher. But the only way you can validate shorts in a bullish market is if intraday, or maybe even intra-week, there is no sequential SMT bullish, or just no bullish confluences whatsoever. If that's the case and there's an overwhelming amount of bearish confluences, then sure, you can validate it. But your win rate will increase so much. Your peace of mind will increase so much simply just by playing in line with the higher time frame market structure. Stop trying to predict higher time frame reversals. Instead, just focus on higher time frame continuation, lower time frame reversals. That is when your highest probability setup is going to form. Your highest probability setup is going to form within the buy side of the curve of the market maker buy model. ICT emphasizes this. It's not going to be within the sell side of the curve, because look how much greater the buy side of the curve is compared to the sell side of the curve. And this is just when I took that screenshot. Let's quickly reference where it's at now. Well, we've continued to trend higher to the next level buy side, which is all-time high. Every single retracement we have had, every single sell side move we've had has simply been short term. It's been short-lived, and the expansion we see higher is just significantly greater. So stop trying to fade market structure, stop trying to fade order flow, because you're just putting yourself in unfavorable conditions. Focus on probability. Stop trying to focus on catching every single move. You do not need to be a part of the manipulation move. Focus on being a part of the distribution move. And that is overall the lesson for today. Any questions, comments, concerns, just reach out to me, let me know. Otherwise, I'll catch you guys all in the next lesson.